We'll get started in a moment. As we go through this, if you have questions, don't hesitate to post them. Hey, Richard, welcome. Well, logging into social media. So we're going to get started here. And here I am. Welcome. So today we're going to do our annual dumpster diving MT Live. And it says for every portfolio. The thing with dumpster diving is if there's no cushion, it's dangerous. Is there a bottom in place? And that is the essential thing that you need to focus on when you're going to be doing a little dumpster diving. Now, there were tons and tons of these dumpster candidates in the last month. It was like our go-to thing. So they're still out there and things are developing. So this year, while it's like the third year of gains, and that puts into question the beginning of next year. Like, how long can this thing go on? Well, it can go on for as long as it's going to. We're just going to follow our trend analysis in multiple time frames, as we always do. But as you know, good part of last year and in part of this year, and that's changing, where it was basically the mega cap stocks that were pulling the market up. Now, with the so-called bursting of the AI bubble, a lot of those stocks are declining and money is rotating into the dumpster divers. And it's likely that that's going to continue into the beginning of the year. So as we go through today's presentation, we're going to show you what to look for. And this is the kind of information you can take into your trading career for the rest of your life, because what we do is repetitive. Yeah, market environments change. Breakouts start working more effectively when you have multiple time frames in an uptrend or in downtrends, multiple time frames. And then there's these transitionary periods. So this is what we're looking at today, those transitionary periods where prices have been going down, they begin to bottom out, and they have attributes that always happen. And it's part of what we're going to focus on today. So let's do that. Hello, everybody. Welcome. We appreciate the hellos.
So,
Dan, is there something bad going on because we're both wearing black?
no, mine's Tommy Bahama Blue.
Okay.
Yeah, welcome everyone. We're coming to the end of the year here, so we have fun with this topic, and you're going to learn a lot. We're going to look for trading opportunities, and this is our starting slide because this is our one-page summary of how we systematically and objectively look for opportunity in the market. And we'll save more, hopefully more time than usual to do live scanning, looking at the dogs. Is it something to get out of? Is it something to start nibbling on? And then some of the other topics about what do money managers do year in that creates some of this additional opportunity at year end. We're price-based patterns. Give me a starting point. Give me a compelling pattern. If you can't answer that, then just end of the analysis. Then whatever time frame you're trading, you take that and you apply our other concepts. And these are some of them. Where is that picture in the trend, support and resistance, multiple time frame analysis, will be very important to today's discussion also. Is it showing relative strength or weakness? Well, if it's a dog, it's going to be relative weakness. So we know that, but that's part of our catch-up strategy. What are the broader markets doing? Well, in today's in this topic, bottom fishing doesn't matter as much, but we always want to be trending with the whale, the life, the broader markets, the sector, position and money management, trader psychology, as Greg always says, that should be up front, up top here, because without that, you're not going to survive.
Yeah. I was thinking, Dan, before we came on, we remember certain things, and I don't know why I was thinking about it, but it relates to the trader psychology part. And I was thinking about this, I guess, what do you call it? Trader coaching thing. I went to trader thing with Adrian Tokrehi. This was like 25 years ago.
Yeah.
And another woman was there that was a futures trader. And, she said to the group, she says, how would things work out if all you did were your best trade setups? And I was like, duh, yeah. And so why I thought of this today, I don't know, but I thought to myself, it would have been great if I would have said to her on that day, well, how do you do that? And she probably would have said, well, define your setup, which I think they did in the session. And it was like the psychology part is so difficult. The biggest hurdle to what we're doing is that, look, yeah, show me my best setup every single day, and I'll do it because I know it makes money in the
Right.
vast majority of the time. But the struggle is when it's not there on any given day. And it's like, so now you start deviating from that. How do you find the patience and discipline for that to happen? Well, all this psychological stuff is gnawing at you. It's like, I didn't do anything today, or my first trade was a loser. I got to make that back. All this shit that plays on in your head. And I mean, it's not about today's subject, but since I had that thought, I shared it.
No, hey, psychology is always good. Uh, so these are just 9 pictures of bullish setups. We have many more. In fact, a bottoming pattern is not even on this list. W bottom, but that's W bottom is not a bottoming pattern. It's a short-term reversal that we're swing trading. But this is our starting point of that prior slide. And then we see again, lay those other concepts, and then we're ready to hit the button. All right, a couple miscellaneous slides here, just for the year-end kind of stuff. Year-end window dressing. What the heck? It's window dressing have to do with the stock market. Portfolio managers, they have clients, they have investors, and they're trying to make their holdings when they send out that final report saying, hey, look at all this good stuff that we're holding. And so they buy more of the winners, they sell their losers, things, the dogs, the controversial, whatever things that shareholders are going to frown on, maybe get rid of those. And I've always asked this myself. Remember, Greg? I think I said this last year. Okay, you're window dressing, but you can't get away from your performance. That's an objective number. I don't care what
Yeah.
around
Like
you do.
like a common sense question is like, you own something that was up 180%. Why did you just make whatever single digits or less than that? Well, do they supposed to show everybody their biggest loser too? But look, it's on the surface. It's all marketing.
Exactly. It's a little misleading. It's marketing, but we're using this to our benefit as year-end swing traders. Tax loss selling. What does that mean? If you have dogs in your portfolio, they're like, hey, you know what? I can pull the weed out of my portfolio, take a tax loss on this, and then that'll offset some of the taxes on my gains. And then I've accomplished two things. I got rid of a dog, and I've created a tax break that I can currently use. Dogs of the Dow year-end strategy. It's whoever came up with this. It's a rules-based approach. It's set in stone. We don't do anything set in stone, but I like looking at these stocks. Greg, you were talking to somebody in the green room today about, you have a bias, fundamental, whatever it is. If it's not confirmed by a chart, it's meaningless to us. So this strategy, I'll tell you what they do, but my response to this is, sure, go through it. It doesn't take long. What you're doing is just ranking the Dow 30 in terms of the dividend yield. The highest dividend yielders means what? What is a dividend yield? It's the dividend that they pay divided by the stock price. So if you have a high dividend, they're either paying out a lot in dividends or doing really, really well. But the theory on this is they're dogs because their stock is so depressed.
But that was part of it, Dan, that they were the worst performers on the year.
Correct. Well, it doesn't have to be worst performer. They're ranking it by this dividend yield, but 9 out of 10 times they're going to be the worst performers, because that's what's creating the high yield. Is the numerator is the yield, the denominator is the stock price. So the lower the stock price, the higher the yield. So do that. Select, this is their strategy. Then the Dow 30, they take the top 10, they invest in all top 10, and they repeat next year. I didn't Google the historical return on doing that, but it's something interesting to do. I guess
I can do it. I can do it in TC 2000. We could do it in the green room.
Yeah. So let's do that. Let's look at the top 10 and apply our technical approach to it and see if there's any that we like. Dumpster diving and catch-up trades. I caught this photo of this guy the other day. But in the stock market, we call, well, they're really two different concepts here, Greg. I mean, catch-up means, and that's why I have this guy here. It's a
Johnny.
It's a catch-up to the sector. So the sector might be breaking out or already has run. And now we got little XYZ semiconductor just now breaking out. And so we call that a catch-up trade, catching up to strength. Dumpster diving is what we're primarily talking about today. There's the dogs, bottoming patterns. Is there its potential reward to risk is huge because they're beat down so much. So we'll be using our technical approach, bottoming, shock patterns. We'll show you how to use the hourly chart to get in these, anticipating the turn. I just grabbed these two. I want to save more time for real analysis. I grabbed these yesterday, I think. So the spiders have pulled back. They're near all-time highs in an uptrend. Bitcoin, we monitor all these things all the time. Weekly chart, breakout failure, and look, it's just slopping around here in an area of support. There's still, we're watching it every day. Ideally we'd like it to blip below 80,000 and snap back, but just showing you something compared to the broader markets. These are two, actually we're in EVH. We bought this one in our advisory letters. Momentum moved down, red bar ignored, big move up, and now it's consolidating with the 20 MA flattening out. This momentum move down is gives what we call a price void. So it has room to go back up. We're not marrying this thing, but if this goes up to 450, let's say, that's over 10% return as a dumpster dive trade. This
Yeah,
one.
go back to the prior slide for 1 second. So what Dan was showing you on the previous slide, or the one that was ahead, are specific pictures of what we're looking for. And look, all of us, we're price pattern traders. So our mission is to find pictures. When you boil it down to what it is, we're looking for pictures. And so this kind of a picture, while it went up, it's not what we're looking for. That's like insane, schizophrenic, bipolar, so at times the markets get that way. Whereas patterns like this are more about what we're looking for, meaning there's these range expansion bars, these attempts to go down and come back up. That's one picture. Now go to the other slide that you were looking at. This is a different kind of a picture. And the takeaway, because it's all about the pictures and what they communicate to us about what everyone else is doing or most are doing. So when prices are collapsing, Dan mentioned the word void. That's just a momentum move where there's no consolidation, an accelerated move. And then this sideways move, however it's going to form, you can see this forms in a different way. Maybe it's a head and shoulders bottom. Maybe it's like this kind of more of a shakeout. And then this kind of sideways stuff. It's just, this is just think about it as energy, mass fear, tremendous emotions. And sideways is dissipating those emotions. How is that happening? Well, somebody believes it's undervalued or it's oversold, as it goes. Whatever it is, somebody's buying it down there. And this is what we call a correction through time. And that increases the void, which opens up the potential to get down into the dumpster and find the garbage that may float further to the top. That's what we're doing.
Right.
Right? We're looking for those pictures, and they happen in different ways. And so the more time you spend with us, either in the green room or through a course, you become more and more familiar with the pictures and you gain experience as to what to look for.
Talking about garbage, cannabis.
Yeah. Yeah. And remember, about a year or so ago, we saw something like that, or 2 years ago, where the Biden administration was talking about
Right.
legalizing. Remember, and it spiked up and then it crashed
Right.
again. They're just talking, they didn't do anything.
Right.
Right. And now Trump is saying about de-escalating, or I don't know the right word, as far as downgrading
Yeah.
it as a certain drug.
Right. Criminal
Yeah.
security, correct.
Yeah. And so now you can get caught with whatever amount, and there's gonna, like, here's your ticket, go to court, collect a little of your money, and so on. And so you got all these spikes. So that's the beginning of a process. So this one here has more of what we'd be looking for. Now, I wouldn't expect it to do this because it was happened on news, but you can see this downside shakeout, head and shoulders, whatever. It tried to go down and it's coming back up. It's a sign of accumulation. Where this one was still, in a downtrend. It's not what we're looking for. This one's kind of sloppy, but
The sector, MSOF.
yeah, it just kind of lifted everything based on the news.
Yeah, so we're monitoring them, but it's an igniting gap, igniting volume. So it does technically look like a long-term bottom, but now we have to go back to the slide of the pictures and wait for our setups, which we're in no rush for because of the excessive gap. So this is one, Greg, you found scanning, wanted me to put it on here daily, weekly.
Yes. So yeah, we were looking yesterday We're talking in the green room. That's where we're talking about. Right? Someone in the green room had mentioned it. And when I looked at it, I was like, damn, this is something good for our talk tomorrow. Because this is something that's severely underperformed. And the same concept, void, collapse, sideways, drop, up, coming up. And yesterday, what jumped out at me was this attempt to go down, besides, this consolidation. What's not attractive about this? And you kind of
Overlapping
discounted a
bars.
little bit. Yeah. All these overlapping bars. That's just so much indecision and uncertainty. But the takeaway is this action and this action, where it takes out the prior bar's lows and it springs back up again. That's accumulation. That's, institutions buying the dip. Now, that in of itself doesn't mean to do anything. It's just one observation. When you go back to the beginning slide of our concepts, and in that slide, there are subsections of each of those sections, meaning, okay, candlestick analysis, bar by bar. Well, now let's go and look at all the different types of combinations of candles that we could look at. And this is one that we see spike down and back up again. So the idea of dumpster diving is, here's this stock. I don't even know what it is. I looked yesterday what it does. I forgot. But I see a pattern that's consolidating for a long time. And it's got a picture that if it can take out these highs, it's got the potential to go up. And you know what I like about it, which maybe you do or you don't, because a lot of traders don't like these stocks that are higher priced because, oh, I can't buy more shares. That's a misconception. You can buy less shares and make a lot more money because it's going to go up points and points. Yeah, you could buy less shares and it's percentage wise, it's going to go up. Blah, 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 blah. But this is the kind of thing that could go up $20,
Mhm.
you know, and you could own 5 shares or 10 shares and make a lot of money or add to it, right? So adding to positions is another thing to doing. So money management is very much a key factor, but this is one of the pictures we'd be looking for.
I'm going to just show you 3 different pictures here. These are not as current, but it's just showing you things when we scan together, just to give you some flavors of what we're looking for of of beautiful bottoming patterns. So, all our daily charts are this clean, color-coded candlesticks. The blue is 20 MA, 50 MA, and I don't even see the red here because it's probably so beaten down. It's off the chart to the upside. But look, it's stabilizing, gap reversal, red bar ignored, closing breakout, weekly chart. Remember, that was one of the concepts, multiple time frame analysis. I have a W retest with a price void. So this was back in August. We bought, this is a closed trade. We track all our open and closed trades for subscribers. This one looks like we shorted and added a money put spread, breakout from a bottoming pattern of the 2050 W bottom weekly, climactic buy setup monthly. So see, that also is telling me it's a bottoming pattern on all 3 timeframes. So
No, it's telling you, but that's what you're telling subscribers. So what this all is, right? When Dan posts this, we're telling them what to do, right? Right. This is the words that tell them what to do, right? Short this put spread for that amount of money, yada yada yada. But the great part about this is the why. So they're learning, or say you're learning while you're earning. And that's not to say some of these aren't losers, but they're managed appropriately. And the tech, you're send text messages as to, hey, this one isn't working, kill it here, or take profits. The point is, Dan said wide range bar from a bottoming pattern with a W on the weekly, Climactic means it went down a lot, and a retest. Now, that all might sound to you right now as a bunch of jargon, like a lot of word salad, but once you understand it, all of those words give you confidence as to why you're doing something. Now, you might say, I don't really care, Greg. Just tell me what to do. I'll press the button because I really doesn't bother me if I don't know. I'm just here to make money. All right, great. But a lot of people want to know how to do it so they can do it on their own. That's how I think most of us start out. I want to learn how to do it on my own. And so all of those words tell you the what, the where, and the why.
Yep. Just another picture. Look at the moving averages, downside shakeout, went sideways, broke out, another kind of a new low reversal with a void. I'm just showing you examples when I want to save time to scan. Greg and I use the term the tell, Tell. It's like, okay, now you've shown your hand. This is our tell, a gap reversal, 2 bullish inside days, void. That's our trade from a bottoming pattern. Yeah, Greg, you're great at describing these things.
I'm just what it is. These are our holiday specials we have at the end of every year, the best deals of the year. And so what this is broken down into 3 categories. Well, let me start here, right? The bundles, it's a word, bundle, right? What is it bundling? Well, it's bundling these option courses, right? We have those that are interested just credit spreads, right? Like the weekly credit spread trader, how to manage them and so on, understanding them, start with the basics, go up from there. Directional, puts, calls, debit spreads, how to trade them, combining the charts to do that, and volatility, right? How do you trade volatility? Now, what we call the MTS courses. The best, I don't know about the best, but I think the most important, managing positions and the money. Without that, you're not going to make it. Right? So while this is a great course and I cover part of this goes much deeper. So swing trading and then gap trading, you want a gap trader, but not only does it trade gaps, it shows you how to trade those gaps in the afternoon. It's a great course, how to rank them and put that all together. So you can get these individually. You might say, well, Greg, I got the swing trading course, but I didn't do the money management course. Well, you can get it for the price, half price that it usually is during the year. With all of these, I think they're 40 or 50% off from what they are during the trading year. But if you're new to us and you say, you know what? Yeah, I'll take all of those. Well, go here and grab the MTS bundle. And it bundles them all for even a better price. Or you want all the option bundle. Get them all of these for one better price. And here, right, the advisory letter where we view the markets, sectors, break it down, trades, directional trades, options, or the underlying, best price of the year. I think it's like not 100. I think it's like $1.40 a day when you sign up for the annual. And this is for those of you that could be with us in the green room, like $1.60 a day. So many they sign up at this time of the year. And even those that aren't with us, like Debbie comes in, maybe here and there in the morning or an afternoon, or she does not around for 2 weeks or whatever. But she comes in and asks questions and we review stuff together. So it's definitely worth it doing it. So this is just the separate ones. So as you go there and you click it, this is the
directional options. So the combo.
The combo, right? So here's the value. You'd go there and click on it. I guess I should have put maybe the price of what the combination is, but it's significantly less than if you would have bought them all separately. Right? Significantly less.
And
So
these are,
this one is separated. Each of the courses you can see here, they're 40% off. So to get one course at this time of year, that's usually $1,000, under $600. So directional volatility, advanced credit spreads, and yeah. So go in there, and check it out. If you got questions, email us.
yeah, just two more examples here of pictures. So down a lot. So this one's not a bottoming pattern per se. It's just a deep retracement. It's finally finding support here at the breakout area. So over the high of this green bar, got my price void. I got my buy set up on the weekly, and it's another trade. Bullish reversal on support. This was an ETF for our ETF investment trader.
Go back for 1 second, Dan.
Sure.
That part right there, right there. As convincing as all of these patterns are that we look at and trade and put in the letter, they always have a stop loss. So all of what we're sharing with you is compelling. It works. We've been doing it for decades. But you know what? We never know for sure that it's going to work. So you've always got a stop loss that controls the loss. That's what keeps you in the game. This is the most important part. Yeah, everybody wants to know this and the candlestick pattern and so on and so forth. Of course, that's what we're trading. But knowing this and how to manage it is so important to lasting and making it.
Yeah. This is an old chart, but I like showing it because this was a beautiful bottoming pattern. Look, this is Bitcoin, which is now almost $87,000. So this was a breakout in late 2020, inverse head and shoulders, and we gave this to subscribers based on this technical pattern. Now, I personally, don't understand the fundamentals of Bitcoin, but I will trade pictures because I don't care what's under the hood. I'm a picture guy. And that is an amazingly bullish, and this is a monthly chart. So
Dan,
what?
as a technical trader, which we are, do you understand the fundamentals of D-Dog?
No,
Exactly.
it's
So
a dog kennel, right?
I don't know idea. Just like VIX is a boat builder, but it's not.
VIK, yeah.
VIK. So look, we look at these pictures, and this picture where something went sideways like that for 2 years, it's built up this base, and as long as you know that it's an instrument that people are likely to be interested in, right? Like these data centers, which are out of favor now, or AI related, they'll be in interest again next year, especially the institutional ones like AVGO, which got killed. They're going to come back for that at some point where they're going to say this is undervalued. And it's going to, okay, does the chart support that undervalued idea? Because it could keep going down. But when you start putting these pictures in alignment with the news, you know, sector analysis and so on, you put the odds in your favor. And then there's the potential for this kind of explosive moves.
So
Right.
these rest of the specials.
Don't say just the rest of the specials. These are awesome. Right. So look, this is one we created years ago. It was like, look, if you just want to be in the room with us, you've never taken a course, um, you're not a letter subscriber or whatever, this was the price, and now that's the special, significant special. When you break that down over the course of the year, it's very small. But for those that take a course, you might purchase MT Advantage, $37 a month, or the weekly option trader, $49 a month, or um, weekly lessons, $11 a month. It's inexpensive to get started in any way, and you want to be in the green room with us. It's a no-brainer price. Use the coupon code Greenie and the Advantage letter, you know, significant discount off the monthly price, and just enter the coupon code there, and it changes the price when you're at the checkout.
And we've looked at that one. And then this is a swing bundle.
Right. So again, you can go there and click on everything, and there's the prices, and you get all three of those courses: gap trading, swing trading, and money management together. And
Yeah.
if you're trading and you don't have education, I don't know how you're doing it. We've heard over the years, once I make money, I'm going to buy your course. Is like, good luck with that. I
Right.
never had anybody come back and said, "Hey, I made the money. I'm buying the course, Greg." Yeah, right.
That's funny. And then
Hey. So
the
these are just individual. You could do the individual, you could do the bundle. Hey, a lot of people, you know what most people do? They buy this one or this one, and they don't get this one. And then they come back and I say, you know what? I really need that money management course. I'm so glad I did it.
right, they learn after that they need it. Yeah.
Yeah.
All right, let's look at some charts and do dumpster diving.
All right. Place. And
And a chart you were looking at this morning, Greg, is Myrna. It's a bottoming pattern on the monthly, but
Mike asked about that.
yeah, there's no entry on the daily, but the monthly was a dumpster dive bottoming
And
pattern.
I explained that to him, that it might run away. So there's nothing wrong with buying a small position and let it wiggle. You'll watch it. So by buying a small position, it forces you, not forces you, but you're going to be more inclined to keep an eye on it and not miss the opportunity. This might pull back. So as visual traders, pictures, you can see how, the 50 and the 200 are coming together, which communicates it's been going sideways for a while. And here's the weekly chart. You get an expanded view compressing the data, and it's been going sideways, sideways. This got annihilated as it deserved to be annihilated. This and Pfizer and all of those ones that pumped up those vaccines that killed people and did all kinds of damage. And they've done roundabout all the way back down to where they started.
Well,
And all the way back. And now it's rebuilding. And so now I doubt, but you never know. I doubt this will ever see $500 again. You never know.
no, I
But
agree.
could it possibly see 60? Yeah, that's a double. Now it's a biotech. We don't like biotechs, as far as they tend to be crazy movers, but this one's been around for so long. I'd be a bit more inclined with this than one of the lesser known ones for sure. So that's definitely been in the dumpster for a while, but it's built up this base now for, over a year. Well, it's definitely one that looks like it could go up, and it, got the attributes there to do it. Which other ones we got to look at?
What if you want to, what did you say you were going to scan? If you want to look at the dogs of the Dow theory, if you want to just look at the sector that's the worst on the year, if you want
I
to
have
look
to switch to a different layout to do that. I
you want
might
to look
have to
at
add something. But
nuclear
look,
stocks, material stocks are all trying to bottom.
all right, let's do this. First of all, let's do this first. Let's sort what's done the worst on the year. Real estate. That's real garbage. That's related to interest rates, and it's a bit more involved in commercial real estate and all of that news that's going on. But everything's up on the year, right? Except for this. And it's just not an attractive pattern. So backing up, we don't really care too much what it is, but look, there's no pattern, no trade. So there's no interest there whatsoever. But if I go to this layout and expand the view, now all of this here is a whole lot of scans within a watch list where you might want to start looking for different stuff. And when you become a member or take a course, if you use this platform, we share it with you. There's no extra cost for that. And you learn all of these different bullish 180s, range expansion 180s, wide range bars, and so on. So as I break this down, here's 142 different sectors. Now, I have to put in here percentage change. I don't have in here on the year, but if I add that, add a value, and my items, percent change, month, quarter. So I can just throw the quarter in there. I'll just change that over here. It's real easy to change. I'll just change it to year to date. And so what's done the best and what's done the worst? All we got to do is sort it. What's done the best? Silver, 155% up this year, followed by gold, electronic components. So if you wanted to look at electronic components, you can go in here and say, well, which done the best on the year in electronic components? And that would be BE, which is now correcting. This is one that probably institutions will come back for at some point. It's hated right now, but look at the pattern here, where it came out of the same kind of pattern that we've been talking about, where there's bottoming action and it exploded. Now we'll have to wait for this to come down. It might bottom down at this low. Maybe it's coming down here, but we'll come back and look at that some point in the year. But what's done the worst this year? Textile manufacturers. Still in a downtrend on the weekly. It's had a nice advance on the daily. This kind of pattern typically does a retest. There's no bottom. There's no pattern here. There's only one stock in it, which is going to look just like that. It's only one stock. Chemicals, materials have done bad this year. It's been unloved. Possibly. It isn't, I'll use the word mature enough. It hasn't gone sideways enough. Excuse me. But it's beginning to bottom out. Excuse me. Oh. So on the year, chemicals. This is how we go through that. What if I want to find the best one on the year? I just sort it the other way. And so the best one on the year still doesn't look good. So the chemical sector could be one of those dumpster divers.
All right.
That, it's just it's not there yet. It hasn't tightened up. The last couple of weeks, I've been telling those that are, in presentations, go to the blog and go to my blog, which is under Start Here, and click my name and find the one that says tight versus loose. And it explains those patterns. So wineries. So just looking at the sector, they're not tight. Right? Alcohol out of favor? Yeah. And again, we can find different ones. Let's see one that's tight. That's not tight. There's office supplies, not tight. This is a big base. That's not tight. Here's my weekly. I should have a monthly chart here. Here's a monthly chart. Oil and gas. Right? Oil's beaten down. Energy sector. Now, it's had some pretty nice advances, but overall, it's what I call a self-correcting uptrend against this big downtrend. Here's the monthly time frame. So as you put together these multiple time frames, which is an art in of itself, it's not ready yet. But maybe something is. That there are different parts. This is oil and gas drilling. So there are other parts which you can come to over here to find. Let's see here. On the week, what's done the worst on the week? Here's another one. So here's oil and gas equipment. Here's Oil service. That's weird that there's nothing in there. That's not right. But so you can see how powerful this platform is. But the platform is powerful because of how it's put together. You can do it in different ways. So as we look at this, I can say, okay, what's done the worst on the year? And that's this cactus, whatever, oil and gas equipment. It's not tightened up yet. It's not the pictures that we looked at before. What's done the best this year? For whatever reason, within the sector, this one's in an uptrend. But now you got to wait for pullbacks. It's not ready. But within that, we could go and say on the day, find me ones with a topping tail today. And so, yeah, that's a topping tail, but this is only one concept. It's in an uptrend. That's not what we're looking for. So as I said, all of these are scans, um, something that's tightening up, beginning to tighten up. It's not quite there yet. And so again, looking at these, what is, percentage, I didn't change the name, but that's on the year. What's done the best? Right, we looked at silver. What's in between? Right. That's in between, I suppose so, opposed to silver versus what's done the worst. But short-term extended. And as we go through all of these, again, we can find wide range bars, what's done well on the week or on the day. Here's one, medical devices, which is beginning to tighten up. The healthcare sector has done well. And, this is erratic, but it gets bought. Now it's pulled back again and it's regrouping. And on the weekly time frame, it's forming a little buy setup. Now it pulled back kind of deeply, but this little retest pattern, I kind of like that. I want to see if it can hold on to the gain. Maybe it's ready to move up. And again, condensing the weekly, this went up for years. You see, look at this. Do I have this on? Look. Up and down, up and down. That's loose. Look how tight this is getting. That means the forces of supply and demand are contracting. They're coming together. We use the analogy, we're winding the spring. That is getting ready to either go up or down. Right? It's like, okay, Greg, thank you very much. When is it ready to do one or the other? Well, this part is still up and it's contracting. So you can call it ascending triangles or call it whatever you want. What it communicates to me is keep an eye on it, which could mean just set an alert because the spring is getting wound. So it makes sense to do that. We could look for what's in an uptrend. So again, very powerful. It puts you in the ballpark of what you're looking at. Medical devices. This one must have whatever, it must keep you alive in some way. But look at how tight that was.
Wow.
Right? Look at how tight.
Wow, that's amazing.
Right? And so these are the kind of things that we're going to be looking for next year. Right? Things that are tightening up, getting ready to move. So this was a new issue back here in July and then did nothing for a long time. But now it just needs to rest a bit. Right, this one is moving up. This one has been around a long time, as you can see down here on the monthly time frame, but it's all wild and whippy and loose, but tightening up somewhat. It's just not ready yet. That's a nice uptrend. I'm getting a little rejection today, but look to the left. So one of the things that you should always ask yourself when you look at a chart, why is it doing that? Meaning, why is this getting rejected today? Because it's such a beautiful chart on the daily time frame. Yeah, it's a little extended, but as I look further to the left, and I don't need to look at the monthly, I could scrunch this one up and go further back. And I see it's up near a prior high. That's where sellers are going to be. It's that simple. There are sellers up at what was resistance. There's going to be buyers down here. See these, what we call pivots? We do MT lives on pivots. We talk about this in the green room. I did an extensive this week about creating support. And so a pivot creates support, and that communicates to us that buyers showed up. And once it happens, I believe buyers are going to show up again. Then I wait for my picture to support that bias. And it did that. And so again, wash, repeat. And this is part of what we do either daily or weekly, looking for opportunities. And so here we can see what did great on the day. And these are my ETFs. So marijuana is doing great today. What's doing great on the week? It's still the best performer this week. And then there's gold, there's regional banks. And so this is what we call a top-down approach. Meaning, what is the broader markets doing? What are the sectors doing? What are the subsectors doing? We can trade the ETFs, of course, and we can then go and look at individual stocks in the sector and then find out which ones are doing the best or the worst, or show me the bullish 180 reversals. Well, there are none today because there's no mark in here. Any bullish 180 reversals, range expansion ones. Are there any bearish ones? No, which tells me the sector is neutral, because I know that these are extended. Well, what about this sector? Well, we looked at medical devices. No bearish 180s, no bullish 180 reversals. Are there any weekly bottoming tail bars? Yes. And it's in a downtrend, but it's a bottoming tail bar on the weekly. Is it near support? Yes, it is. The daily is in a downtrend. There's a retest and reversal. What do I do with that? Then the first thing that comes to mind is, how do I make money from it? When I say, what do I do from it? This is the kind of pattern that lends itself to considering a credit spread, a put spread, which is what's great about credit spreads if you know how to take advantage of them. Now, I don't know if this has premium. You got to go and look at the option table and then pick what strikes and time to expiration, which is all more education to learn how to deal with that. So when we see something like this, that's down a lot, it's not a directional long and it's not a short, but it could be a credit spread. And what we look for is retests and reversals and ideally wide range bars, which support a bias that it's not going to go much lower. But could it go back lower? Yeah. Well, what credit spread, what strike, time to expiration. So we could continue to look for things like that. This was, again, the only one. But let me show you a different layout before, well, we still got time. I'll show you a different layout that we share. So this is the top-down approach. And you say, well, Greg, how about just finding me bullish wide range bars in anything? I don't care what sector it is. Yeah, we can do that. We come over here in this layout. I mean, look, you're paying $600 for a course and getting access to this. This is worth more than, I wouldn't say it's worth more than the course, because this is like buying a gun and you don't know which way to point it. But once you know how to utilize it, and you can say, just show me the bullish wide range bars. And you come over here and it's like, there you go. There's a bullish wide range bar. But it's trending down. This is not the kind of stuff we look for a credit spread. And it's $15. It's already moved up a bunch. So this isn't something I'm interested in. But we can continue to look. Now, there's a bullish wide range bar, and that's something that I like to think it can continue to go up. This is something that, you can say, well, it's in a weekly downtrend, Greg. Yeah, but you know what? I don't care about that. I'm thinking short term.
But that was also a good dumpster diver, out of the consolidation.
Right. And it might make another dive, but what if it's a bullish 1-2-3 tomorrow? Right? And it forms an inside day. And then Friday could be a continuation pattern where you would come here and look at, you'd click on this tab and you say, show me the 1-2-3s. And so there you go. 1, 2, 3. It's got room to go up. It's consolidating. I can see that on my 65-minute chart. There's a 1-2-3. But you got to know how to put together multiple time frames. There's a 1-2-3. 1, 2, 3 is coming. Right? Theoretically, 3 is coming. Moving up. There's your bottoming pattern. New all-time highs. Apparel and manufacturing. They must make some nice stuff. Gildan activewear. It's a good pattern. Let's look at another one. There's a bottoming pattern, 1-2-3.
That's today's subject right there.
Yeah, that's a dumpster stock.
Mm-hmm.
Here's the weekly chart.
Looks great.
Let's look at the monthly chart. Right, it's on some support.
Mm-hmm.
Earnings are going to come out in February, so we're clear there. And I like it.
Yeah.
You could do that as a swing or an intraday trader.
Setting an alarm.
Yeah. So this puts you in the ballpark of what we're looking for. PCAR, is it? No, it's not PCAR. KIR. There's a 1-2-3. That's not a great 1-2-3 because it's up a lot, but it still could go. But it's not the best. And here the weekly chart. No, it's near resistance. If it consolidated a little bit more, it'd be more interesting, right? And so, look, what if you're bearish for whatever reason? Show me the bearish wide range bars. Well, that would be, if that was an $11 stock, that would be a no-brainer call spread.
Well, because it could have 1150s, FDMT, but therapeutics, a bio.
Yeah. So just this is why we shy away from these bios. And that, look, this was an amazing looking chart. Now we wouldn't be in this because it's got to clear these highs to trigger. It did trigger above this high. There's probably some news. But anyway, this is what we call a shock pattern. That's another subject that we cover in the courses, shock patterns, and we've done empty lives on them. But that's a nasty bar. And that was the unexpected. This pattern didn't support that. So maybe there's some news. You can check to see if there was news on that today. AMD. This is a stock that is loved but hated. And what I mean by that is it goes in and out of favor. And when it's loved, it's really loved. But they don't love it until they've killed it, which is what happened here and happened here. And then when it's in favor again, they're going to come back for it. So that certainly looks like it's going to go lower. What else? Google, that's rolling over, just correction time. Got extended. Google L. Building materials. Surprised this did as well as it did. But now as interest rates have been clicking up a little bit, and Lennar got killed, I think, today. So this is the intermarket analysis part of the course. Right? In the swing course, I cover that. But the full MTS course goes deep into intermarket analysis. But there you go. Here, wide range bar. This is a call spread candidate, Dan.
Sure. Of course.
So we would just look over here. We'd take this and scoot that over a little bit.
Yep, 285.
And go like 285. Maybe a little tighter. Go here and scroll down. 285. That's too wide. Look at the spread. This is the frustrating thing about credit spreads. It's like you find a great pattern and you come and there's either the spread's too wide or there's no premium. You know what this tells me? The market makers believe this is going down. And if you want to play, they say, come on in, idiot. So come on, let's suck you into something here because they want, their edge.
But if we get a 1, 2, 3, we can short it.
Sure. Or buy a put. You can go over here and say, oh, the put's expensive.
Yeah, same problem, spreads.
Yeah, I mean, they're spready, but you get what I point. This is what we have to go through to find opportunities. And when you subscribe to the advisory letter or the weekly options trader, you're paying a small amount of money for us to do this work and find you the opportunities. But if you want to learn, there you have. So I think that's a wrap, folks. We covered a tremendous amount here. If you have questions on any of the end of year specials, email us and we will send this recording out and sign up for Dan's presentation tomorrow. He loves bottoms, big fat bottoms.
Oh,
We'll
yeah.
cover that with you. Or breakouts. So bottoms or breakouts tomorrow.
Both, yeah.
Yeah. So yeah, we'll be back next week. I think. Are we doing next week or are we closed for the holiday? No, I think we're doing next week. And then we're gonna call it a day, I think, because it's Christmas Eve, or I think we're doing. I don't remember if we're doing. Anyway, we might be here. We'll let you know. Have a good one, everybody. We're going back to the green room. Bye bye.